Joshua here with another edition of Mortgage Clarity, and we're actually going to do a short series of videos related to news headlines and trying to find out if what the headline is saying is true or if there's more to the story. So if you like this video and you want to see the other ones, be sure to hit subscribe so you're alerted to those. And of course, at any time if you like a video, please hit the like button, as that helps other people be alerted to the information on the internet. So let's just go ahead and jump into it, shall we here? All right. First news headline we're going to tackle is the talk about a housing bubble. So is there a housing bubble? There's certainly been a lot of demand, a lot of activity, and so it gives that feeling there could be one, but let's just take a look at this. So let me go ahead and jump down here. So first thing we got to ask ourselves is, what does a housing bubble look like? Simply because you have a lot of activity in any sector doesn't necessarily mean it's a bubble, whether it be a housing bubble or a stock market. There's more to it than just simply the euphoria or the activity around where we think a bubble is. So I think it's really important to take a look and see how 2022 compares to 2006 when we did have a housing bubble. So this graph here shows, you'll see this this green line here is the US population growth over time. And this dark blue here is housing inventory available in the market. So right here is 2006. 2007, leading into the housing bubble. And what you'll notice is, compared to what we actually needed from this green line, we diverged quite a bit, and we had a lot more homes on the market than we needed for either housing or for renting. So how did this bubble even happen? Well, leading up into 2006 and 2007, the requirements around lenders and what they had to do to actually show that a borrower was eligible for a loan was considerably less regulated and more lenient on what they had to do. They had loans where people could just state their income, loans where you could qualify, instead of qualifying on the full payment, you could actually qualify on something less than the full payment. So all kinds of different programs that allow people that probably shouldn't have bought one home to be able to purchase 3 or 4 homes. And so people became speculators in the market and created this false sense of demand to the point where we got to the bubble, to where it just couldn't expand anymore, and then it popped. And as a result, then there was a lot of changes now to the mortgages and how those are originated and what lenders are now required to do to be able to show that a borrower has the ability to repay. So it's a very different market. But you'll notice here how we drop down here where we're at today. We had continued population growth since 2006, yet our inventory level year over year continues to decline and decline and decline. And part of this is pent-up demand coming into the market, but also housing building hasn't quite recovered to the same degree that it was pre-2007. So let's go ahead and take a look now at this one. This is another way to kind of show the housing market. So 2007, where we did have a housing bubble, we had 3.81 million units of homes on the market, but we probably only actually had about a 2.2, 2.3 million demand of what we actually needed. In 2012, we started seeing a balanced market, and this is where the buyers and sellers didn't really have an advantage over each other. So it was a very a good time to buy, as far as you weren't going to get a deal, but you also weren't going to lose on it either. It was fairly balanced. But since 2012, we continued to see the inventory levels drop, as the building, again, never came back into the same amounts as we had before. Our larger builders are building a lot right now, but a lot of their smaller builders that were doing, mom and pop builders are building maybe 2, 3, 4, or 10 homes a year. They haven't quite come back as they were pre-bubble. So today we have a population about 14 million more households than we did in 2006, yet inventory levels are at 0.95. So this is why when the news says there's a housing bubble, I will have to disagree with them on this one. When I look at what I see for inventory availability, what I see as demand, it doesn't show to me that there's actually a bubble here. Would current increases of interest rates have an impact to this? Yes, I think we would definitely see that the rate of appreciation going up will slow. But just because you have slowing appreciation doesn't mean values are going backwards, and it doesn't mean that inventory levels have come back in. But also at the same time, while we might see some reduction of buyers due to the higher interest rates, I also think we're going to see some reductions of sellers who no longer want to put their house on the market and trade a 3% interest rate for a current market rate. So for this reason, I do think that going into the future, we're going to continue to see that sellers will have the advantage. that and because of that, we'll still see stronger than normal home appreciation rates year over year. Values going up, which is great when you own a home. But we'll also see it continue to be a seller's market where you're going to have multiple offers on homes. So I hope this video was helpful. Again, if you found it helpful, hit the like button and stay tuned for our next one. All right, bye for now.